Hello folks, how are you? Welcome again to my channel GATOSEFX with your mentor Mr. Gatose, myself here. Well, today I am very super much excited. I would like to take you through fundamental macroeconomic analysis concerning the economic performance of United States and the United Kingdom with respect to the news, which are interest rate and inflation rate, as well as GDP. I want you to be able to analyze and understand the correlation between inflation rate, gross domestic product of a state, and how the central bank monetary policy instrument, which is interest rate, how is it used to bring about stabilization of the economy as well as the price, and in fact how do the central bank correspond with these effects of the economic event when happens in order to stabilize the economy. But then we need to understand and link with the strength of the currency. So it can be like an economic aspect when it's happening, like when we have an inflation. How will the central bank correspond to in order to curb that inflation? The instrument, the policies that the central bank is going to use will in fact affect the strength of the currency. Like for us trader, we call news. I've been always telling people that fundamental macroeconomic analysis tells us like how or why the price is moving from one point to another. Like when you see the market trend is bullish in the higher time frame, what is causing that to be bullish is not due to technical, it is due to fundamental reason. As the purpose of the government and central bank is to bring about sustainable economic development while maintaining stable prices. So this definition or this function of the government, by which the government correspond with the central bank in order to attain sustainable growth and economic development and maintain stable prices, is one of the very important aspects that each and every government must have compromised with it, whether it is a dictatorship government, democratic government, or monarchy government. You wouldn't have been running and ruling if you do not have a promising environment for growth, development, and stable prices. So, in order to affect it, we have different policies like the government fiscal policies and monetary fiscal policies. But for us, we are more concerned with monetary policies, just because they are influenced by the central bank, and the central bank is the institution which is legally being entitled to control for money supply as well as stabilization of the economy, right? So today with this episode, I will just narrate from the data, from the really statistical data and reported by the central bank. These data, I have extracted them from the source, which is Forex Factory website. I have just selected a sample of data from year 2022 to year 2023 as to how the economy has had operated and how did the central bank correspond in order to address the economic situation of those states, the decision made by the central bank, how it affected the economy at large, and the strength of the currencies, and what would it imply for you as a trader or any financial speculator who looks to make decision based on the decision made by this central bank like Federal Reserve of America, Bank of England. This is the sample space which I have used. So let me take you through United States of America. I just selected a sample of inflation news for financial year 2022 to 2023, as well as the GDP and inflation and interest rate. Like when we look at the report of inflation rate for the US for these 2 years. Here is the report that we have from last year, 2022 January to June 2022. We have seen that we have had an increased rate of inflation from which reached the highest point of 0.7%. Although this rate is within the state rate that is less than 3%, but this rapid increase would have just stimulated the central bank to imply hawkish monetary policies, just like we have heard from the Federal Reserve last speech of the chairman of Federal Reserve of US on 1st December 2023, when he was addressing his speech. Like he said that the Fed aim is to at least maintain a 2% inflation rate. Though now let us look at the data. Here we see we have a persistence increase of inflation rate from January to June 2022, and then we have a drop down of an inflation rate from August to November and even December this year. So this increase of inflation rate, of course, although in terms of economy it is still efficient, but consumers wouldn't have been happy with the rapid increase of the prices. That's why we see the Federal Reserve have had corresponded by raising the interest rate. They applied the contractionally hawkish monetary policy in order to address the issue of inflation. Like you see, since last year, June to July, the Fed has just increased interest rate from 1% to the highest level, which was about 5.5% up to this year. So this rapid increase of interest rates was due in order to curb for the increase of interest rates. As you see, we have an inverse relationship. As the interest rate was keep on rising, inflation rate was dropping down. That means the Fed and the government of US decided to use hawkish monetary policy by tightening the interest rate, raising interest rates. This was the approach that the Fed was opting in order to curb for this increase of inflation rate, which you have seen in the first quarter of 2022, right? So now when we look at the corresponding chart whereby we have both data, the US Fed reports on CPI and fund rate for 2022. We see the blue bars represent the interest rate and the orange bars represent the inflation rate. You see now as interest rate keep on rising, the inflation rate was still maintained an average constant, but it was dropping. Now, what is an economic implication of this? You have to understand which is an independent factor and which is dependent factor in between the interest rate and the inflation rate. You know, interest rate for the case of US is just decided by the FMRC, Federal Open Market Committee, sits and decides to impose a rate of interest rate in order to attain a certain economic objective. But for the case of inflation rate, there's no any other institution or single individual who could have just decided the inflation rate to be at a certain percent. This is just a natural cause of the economy operation due to the forces of demand and supply of commodities and services. So the role of the central bank is just to have a collective measure of changes of prices of all goods and services in the economy and come up with results of rate by which they have just seen, prices have been fluctuating in the economy, right? So under this circumstance, we'll just say that the inflation rate is an independent variable, while interest rate is a dependent variable. So when we have inflation rate keep rising, then we expect the central bank to apply hawkish policies or monetary policies, or the government will just apply the fiscal hawkish policies. So it depends with the economic situation, the decision that either the government or the central bank will just make in order to address a certain economic situation. By all these of them will in turn affect the strength of the currency. Like when we raise the interest rate, that means the demand of that domestic currency will just keep raising high during the news release. But in a long term, let us look at the GDP, because the aim of the government is to bring about sustainable economic development while maintaining stability. So when we look at the US GDP data, we see from the year last year, 2022, January, February, we have a GDP growth of about 0. It reached the high, the rate which is 0.07% economic growth. But then, due to the rise of inflation rate, as we see from the month May, June, July to September, once the inflation rate was keep on rising, now the GDP was dropping down even to negative 0.01. So there is an inverse relationship between uh, GDP and the inflation rate, because I said always I teach my student that inflation rate is the number one enemy of the economy if it goes beyond the reasonable rate that is efficient for the economy. So here you look at the graph when inflation rate was keep on rising since last year, March, April, May, June to July. Look at the data on the GDP of the US economy. GDP was dropping down up to negative. And the moment that the Fed decided now to increase interest rate, when the interest rate was keep on rising, in order to curb for inflation, since July, August, September, once it reached 4% to 5% of an interest rate, look at what happened to GDP. Even GDP of the US now started to grow from October 2022. It maintained a level of at least 0.03% in average up to September, October, whereby we have had a good rise of GDP up to 0.05% in October 2023 and November 2023. So these things are corresponding depending each other. Like we see now, we have a rise of interest rates in order to curb for inflation rate, and then the GDP now is starting to pump up, like we are going into a prosperity, economic progress out of this depression, which has happened in April, May, June, July, and August 2022. So the rise of interest during these months last year has caused an increase of GDP for the preceding months. So the decision made by the central bank would in fact cause the effect of economic strengths of a state. Like now you see, when the GDP is increasing, that means even the production has increased. We expect that export will also flourish in the demand of domestic currency, because this is US we are talking about here. The demand of the domestic currency also will just flourish. So what I'm looking forward is that GDP, I mean pound, dollar will continue either to be weak if the Fed will continue to raise interest rate. Like this is a sample space of GDP USD pair. Although in the higher time frame, this is monthly time frame. This time frame is very bearish. We are in bullish retracement phase, and this bullish retracement phase is just facilitated by the increase of the interest rate. So if interest rate in US will keep on rising, then dollar will persistence continue being weak and bearish, and GBP will continue to buy, as we have seen in the chart that dollar have been buying since 2023 August, just because of the rise of the interest rate, right? So the same has happened to with the UK. We can see here, of course, this is still the US reports on both interest rate, inflation, and GDP, national product. Like the blue bars represent interest rate. Like as the interest rate was keep on rising, we see the inflation rate have been constant and dropping down. By then, the GDP of the state has also been keep on rising. So the same aspect happened in UK. We have seen the inflation rate in UK. The yield report was very high, reaching to 10%. So the Bank of England have had to make a corresponding decision by raising interest rate in order to cap for this fluctuation of the prices in the economy, whereby we see as interest rate was keep on rising, the Fed corresponded by raising the interest rate. Okay, so but look what the national gross domestic product of UK, it was in choppy due to the higher interest rate, inflation rate rise, which is in fact harmful to the economy, whereby we experienced even a negative 0.06 drop down of the GDP for the month August to November. However, December we have a flourished GDP to 0.04, but again the economy was still in choppy movement. Like you see, most of the pairs of pound were selling for the last 2 months, although now pound is in the higher time frame continuation to become bullish, just because of the reaction of the central bank to now increase this interest rate. Okay, so this is like we can see from this diagram where we have a bank rate, CPI, and GDP. Is inflation rate keep rising, the central bank corresponded by increasing interest rates. You see this blue bars, which represent the rise of an interest rate in order to cover the inflation, but still inflation rate is over and above the interest rate. In the GDP of United Kingdom, which is represented by this line chart here, mean that still the GDP is not yet flourished at the level which we can say that it is in economic efficiency. So what I'm looking forward is for the central bank decision, which would have in turn affect the strength and the power of the currency. So in order to have these all things being aligned, I think let us look forward for the decision made by the central bank to address these economic challenges. So here with GATOSEFX, we'll be keeping you in touch and keep you update with various decision and data, just as reported by the central bank of this particular state, and see what we can predict the central bank decision and the effects on the strength power of this currency, so that we can make various decisions. But for the pair like GU, I'm expecting GU will continue to be bullish for the recent months, and after all, we are now closing the year 2023. This is December. I'm still looking forward for continuation of bullish trend for at least 1 to 3 months, but it depends with the inflation rate. You know, inflation rate is the factor which make central bank to impose policies that will have just affect the economy and they bring about